Greetings. So my expertise in fintech goes back quite a few years, and I've even done a video about industry-leading fintech M&A reports that I've published in 2017 and 2018, and you can look at those in this card up here. But one of the big companies in the fintech space, and certainly one of the most well-known, is Robinhood, and I have some slight connections to that company in that I'm acquainted with a few people who work there, and I've been acquainted with them ever since Robinhood was a much smaller company. Now, Robinhood just recently had its IPO, its initial public offering, and this qualifies as one of the tech disruption wealth creation events that this channel features. And in the earlier days of this channel, I also featured other companies such as Roblox and Stripe that you can see in the channel archives page. So what is the history of Robinhood, and how much wealth was created, and what is truly its disruption, and how did the IPO manifest? Those are some of the topics that we're going to go through in this brief video. So this is the Wikipedia page for Robinhood, which is a good place to start to see the holistic picture of a company. It was founded in 2013, 8 years ago, and the founders, Vladimir Tenev and Baju Bhatt, were friends at Stanford University as undergraduates, and both of them are in their mid-30s. So this is a classic Silicon Valley story of someone making it big because they started a company young, and by the time of the large financial liquidity event, they both were still very young but became billionaires in the process, and both of them are billionaires. We'll go to them in a little bit. And the company has 1,281 employees. Now, as you know, Robinhood came into being as a form of high-tech brokerage app that reduces brokerage commissions to virtually nothing. Now, this is a continuation of a technological trend that began long before 2013. For those of you who are old enough, you may remember that in the 80s, to sell any stock, the commission was maybe $40 per trade, and you had to do it either through a phone touch-tone digitized service or by writing a paper letter, and so people did very few trades. Then the price kept going down, $10 per trade, $5 per trade even. But the gross margin that these so-called discount brokerages were charging was still extremely high because the cost to them was mere cents, but they would charge $5 per trade because there was no real price elasticity for the consumer going lower than that, or so they thought. Robinhood came into being by saying the cost of trading could be zero, and the data of all these trades was the real value. So in that way, it has a business model similar to Google or Facebook, where the end user thinks that the product is free, but the end user is contributing data that is valuable to the people that the company sells the data to. And the data that Robinhood gathers is very valuable to institutional traders because they get real-time data insights on what the consumer trends are for investment, what the retail investor is doing when fear is at the maximum or when complacency is at the maximum. And unfortunately, this leads to the very savvy institutions taking advantage of retail investors even further because they have access to this crowd level data that the individuals just don't have access to. But that's not really Robinhood's fault, because if Robinhood didn't exist to aggregate and sell that data, somebody else would. So the company started in 2013, and the innovation was $0 brokerage commissions. That is an atom disruption to the extent that the cost of a certain action gets cheaper and cheaper. In this case, a brokerage fee going from what might have been $8 or $5 from the incumbents before Robinhood down to $0, and therefore more and more trades, and also smaller and smaller accounts. People can start trading stocks on Robinhood if they have a much smaller opening account balance than might be necessary even for E-Trade. So it has created more democratization and more access, but also more conduits through which small-time people can aggregate their data into one place that Robinhood can then sell to large institutional clients. Now, going through the financial history of the company, we go to this article over here. On this website, Business of Apps, we see Robinhood's history. As we scroll down, founding date, same as Wikipedia, headquarters Menlo Park, California, so on and so forth. But the revenue of the company, 2015 was the first year of revenue, very little, 2.9 million, and growing ever since. 9.3 million, so on, rising, and up to 959 million in 2020, and obviously much more than that in 2021. There is a tripling from 2019 to 2020. 2021 might also be as much as a tripling, for all we know. Will surely be almost a doubling, maybe 2 billion of revenue. The number of users, much less important than revenue, but it went from 500,000 users up to about 18 million users. That's still very, very few in terms of brokerage accounts, but because Robinhood represents a conversion of low tech to high tech, that is why Robinhood, currently as a publicly traded company, has a valuation in excess of $42 billion. So despite having just 18 million users, the valuation is $42 billion, and the valuation is also over 40 times 2020 revenue. Forget about profit, it is 40 times revenue and over $2,500 per user. That is the value of data. If you wonder why Google and Facebook could be worth so much, 1.8 trillion for Google and 1 trillion for Facebook, then surely Robinhood can be worth 42 billion when it has 18 million users. And now valuation progression, 2017 was the first year of a valuation print, 1.3 billion. 2018, 5.6 billion. 2019, 7 billion. 2020, 11.7 billion. And 2021, after going public, right now, as of mid-August 2021, it's actually about 42 billion, and you can check the market capitalization on any weekday because it fluctuates a bit every day, but it is $42 billion. So that is the wealth creation effect. Now, at its $42 billion valuation, the two founders that I mentioned before, both of them are in their mid-30s, and both of them have net worths of about $2 billion each. So they are billionaires, in fact, billionaires 2 times over, at a relatively young age. But within a $42 billion valuation, the rank and file also made a lot of money. The vice president level people, depending on when they joined and how much stock they retained, they might have made as much as 100 million in the deal in some cases. And the mid-level people, the senior managers and the directors, they might have made 10, 20, 30 million dollars each based on when they joined the company. And remember, those are numerically the larger number of people. So the rank and file also made meaningful wealth in an exit event of this size. So this is an important event for the fintech sector. And it's an important day for the atom because low tech got converged to high tech. Brokerage commissions became free. Now that will lead to an excess amount of trading and introduces more high frequency trading and algorithms into the market. That can cause other problems, but that isn't necessarily Robinhood's fault per se, because the economic megatrend was towards lower and lower commissions and eventually zero commissions, because that is under the atom principles that we all know very well. Now, one thing to be aware of in terms of how the company went from a startup in 2013 to a big public company with 42 billion in market cap now in 2021 was the extent of their financing along the way. Despite the revenue that we saw Robinhood had, they took in a lot of venture capital financing. From this Crunchbase website, you can see they took $5.6 billion of venture financing. That is a lot of financing. Despite their revenue, they could not fund their operations on revenue alone, even very recently, even in 2019 perhaps. And therefore they took a lot of venture financing and endured a lot of dilution. That is why the founders only owned 5 or 6% of the company each at the time of the IPO. Sure, they became billionaires nonetheless, but the percentage ownership was not very high in relation to other tech successes such as Google and Facebook, where the founders owned much more than that percentage-wise. 5.6 billion of financing along the way. They needed that to grow fast. So that was a lot of dilution along the way, and that is a large variable in determining what the rank and file and even the founders can ultimately make. The rank and file get diluted even more than the founders. So despite the large numbers that I quoted before of senior managers and directors maybe making 10, 20, or 30 million in this IPO, that is after a fair bit of dilution. Had there been less dilution, they might have made 2 or 3 times that amount, as can happen in other companies when they go public at a similar market capitalization. But there you have it. Robinhood is one of the early fintech companies to actually go public. And ironically, it goes public on the NASDAQ stock exchange, where most of the people trading the stock are going to have brokerage accounts in Robinhood's competitors, such as E-Trade, Charles Schwab, and Fidelity. How much of Robinhood's own stock is going to be traded on the Robinhood app? That's kind of funny, but that remains to be seen. And we'll see how that shakes out. Does Robinhood have some indirect influence on the trading of its own stock? And is that a Securities and Exchange Commission issue because of the somewhat unprecedented nature of this situation? I mean, E-Trade is also a company that went public at one time, but it was a much smaller share of the market and did not grow nearly as quickly, obviously, as Robinhood did. It was not really a conversion of low-tech to high-tech the way Robinhood is. But anyway, this was an entry in our series of wealth creation technological disruption events, a company that was in fact an atom disruptive technology leading to more deflation in the economy, has gone public and has managed to earn a very high multiple of its own revenue in its valuation, and has turned a lot of people into multimillionaires and the founders into billionaires, in fact. So if you're curious about the actual anatomy of how this process works and trying to observe how some people go from not being wealthy to being extremely wealthy, this is one of the case studies of that. And if you're in the tech industry or the financial services industry, you may want to look at who you might know that works at Robinhood. Go on LinkedIn and see if there was some acquaintance that you met somewhere, and if they work at Robinhood now, and if they've been there for a long time. Maybe send them a note of congratulations if you feel like it. But these are people who have made money in the very recent past. And these are people in your network potentially if you actually know them. So that's another way to think about how you can use this type of information to kind of claw your way up the hierarchy as well. I hope you found this video informative, useful, and enlightening. If you like this type of content, I encourage you to subscribe to this channel, and thank you very much for watching.